Good morning, capitalists. Here is everything you should know today. Hello, capitalists. Here is everything you should know today. Exxon and Yamaha flee blue states south. Hormuz vessel traffic trickles amid Iran blockade. Fed expected to hold rates steady amid Iran oil turmoil. Costco launches fertility treatment discounts. Investors hope they have seen the end of Iran war volatility. Josh D'Amaro takes on Disney CEO role. Today's Markets Plus Assets, sponsored by Golden Crest Metals. The Dow Jones Industrial Average is at 46,531.34, down 0.98%. A roughly 450-point slide. Pressured by energy and industrial names feeling the geopolitical weight. The S&P 500 is at 6,665.85, off 0.75%. Broad selling across sectors, though not a full capitulation, still holding above recent lows despite the pullback from midweek highs. The Nasdaq Composite is at 22,284.14, down 0.87%. Tech and growth stocks led the downside, consistent with the flight from risk assets. Volatility ticked higher. The CBOE VIX Volatility Index is at 23.69, up 5.90%. The fear gauge is climbing but remains below panic territory. Recent peaks were around 35, signaling increased caution rather than outright dread as traders eye Middle East headlines. Commodities are mixed, with safe havens retreating on the day. Gold is at $4,893, down 2.30%. After recent records above $5,000 in spots, we're seeing profit-taking and some dollar strength, though it holds strong as a hedge against ongoing energy chaos and inflation risks. Silver is at $77.31, off 3.27%. Similar pullback, with industrial demand worries adding to the pressure on the white metal. And crypto taking a hit today. Bitcoin is at $71,323, down 4.43%. BTC gave up recent gains, moving in line with broader risk assets amid the equity sell-off, less decoupling than yesterday's resilience. Welcome back to the show, everyone. It's March 18, 2026. Let's jump right in with some corporate relocations that are continuing to highlight shifts in the business landscape. Yamaha Motor and Exxon Mobil are the latest companies heading south from high-cost blue states to the Sun Belt. Yamaha is moving its headquarters from Cypress, California, where it's been for nearly 50 years, to Kennesaw, Georgia, with the relocation starting late 2026. They're citing high operating costs and regulations as the main drivers, and they plan to sell their California campus by 2028. Exxon Mobil, meanwhile, is shifting its corporate registration from New Jersey to Texas. This aligns with their existing headquarters in Spring, Texas, and the move is aimed at gaining stronger protections against activists and climate-related lawsuits, along with closer ties to policymakers. This fits into a broader accelerating trend where companies are chasing lower taxes, cheaper wages, more affordable office space, and available talent in places like Texas and Georgia. A lot of this follows population shifts away from the coastal hubs. The cost savings can be pretty meaningful. Think 15 to 20% lower expenses in cities like Austin or Dallas compared to California or New Jersey. That, plus easier scaling and more affordable housing to attract workers, really makes the math work for these moves. Switching gears to geopolitics and energy. The situation in the Strait of Hormuz remains tense. Iran's effective blockade has drastically reduced tanker traffic. Only 21 tankers have passed through since late February, specifically since the conflict intensified on February 28th. That's a sharp drop from the more than 100 transits we used to see on a typical day before the war. Nearly 400 vessels are now backed up in the Gulf of Oman, with thousands of seafarers stranded. Many ships are diverting to ports in the UAE and Oman, like Fujairah and Sohar, which is creating congestion in those areas. There have been at least 16 attacks on vessels in sporadic, seemingly random strikes near key zones. These have hit ships under various international flags without an obvious pattern, which is adding to the confusion in the markets. Interestingly, some China-linked ships have been able to transit safely, and Iran continues its crude exports to China. At the same time, companies like Costco and others have paused bookings in the Middle East following some of these incidents. All of this is feeding directly into the Federal Reserve's thinking. Today, the Fed is widely expected to hold interest rates steady at 3.5 to 3.75% for the second meeting in a row. Persistent inflation risks tied to the Iran-driven oil market chaos are a big factor here, along with erratic job data and an economy that's still showing real resilience despite the mixed signals. Markets are pricing in basically zero chance of a cut right now. Futures are pointing to possible easing only around September or October, and maybe just one cut total for the rest of 2026 given all the uncertainty. The Iran conflict has pushed oil prices higher and stoked inflation fears, while core inflation has remained sticky above the 2% target for years. That has the Fed in a cautious wait-and-see mode. The labor market isn't helping clarity either. Those erratic job numbers add to the hesitation. Solid GDP and overall economic strength keep the bar high for any rate reductions, even if there are some internal dissents. Chair Powell's post-meeting statement will likely highlight the risks from Middle East tensions, the potential for inflation spikes, and the need to keep policy options balanced if those pressures continue. On a brighter note for consumers, Costco is stepping into the fertility space with a new partnership. They've teamed up with Sesame and IVIRMA North America to offer members up to 80% off fertility medications and services, including IVF and egg freezing. Infertility affects 1 in 6 Americans, and the high costs have been a major barrier. This program aims to help through coordinated telehealth and in-clinic care. The discounts on medications are especially significant. For example, something like Follistim, which normally runs around $2,000 per cartridge, could see massive savings. That adds up to thousands of dollars per IVF cycle or treatment. The program covers a full range: IVF, IUI, egg freezing, PGTA testing, single embryo transfers, fertility preservation, and even specialized care for LGBTQ+ patients. Sesame handles the evaluations and planning via telehealth. IVIRMA takes care of the in-clinic procedures, and Costco pharmacies dispense the medications with transparent pricing. It's all accessible nationwide online through Sesame's site, as long as you have a standard Costco membership. It's a practical step to lower some of those barriers. Shifting to markets, investors are starting to wonder if the worst of the Iran war volatility might be behind us. The S&P 500 rebounded 1.3% this week, marking its best two-day stretch since the conflict began, and it's now down just 3.8% from January highs. Oil fears have eased a bit, bearish bets are unwinding, and resilient earnings are providing support. The VIX has dropped from a peak of 35 down to 22, which signals reduced panic. Traders have been moving away from downside protection, with demand for those hedges subsiding from recent highs and not much enthusiasm left for VIX plays. Despite concerns about oil surges, supply chain risks, and some worries around AI and private credit, the losses haven't reached full pullback levels. Earnings growth has helped keep things grounded. A strategist at CFRA pointed out that investors are staying relatively calm. Underlying earnings are strong enough to prevent deeper reactions to the geopolitical events. Finally, a notable leadership change in the entertainment world. Josh D'Amaro, a longtime Disney executive and former chairman of Disney Experiences, officially takes over as CEO today, March 18th, succeeding Bob Iger at the shareholder meeting. This ushers in a new era with a focus on theme parks and streaming growth, especially amid some recent pressure on the stock. D'Amaro steps up after a planned succession process. Iger will stay on as an advisor and board member until his retirement at the end of the year. The priorities look clear: sustaining the momentum in theme parks, delivering profitable streaming quarters, and pushing expansions like the new parks in Abu Dhabi. Those areas have been strong earnings drivers lately. Disney had a solid 2025, topping the box office with hits including Lilo and Stitch and Avatar, plus achieving streaming profitability, which helps smooth the handoff. That said, the stock is down over 10% year-to-date, so Wall Street will be watching closely to see how tomorrow executes on parks, streaming, and the broader post-Iger strategy. That's the roundup for today. Thanks for listening. We'll catch you next time with more on where markets and the economy are headed. That's the roundup for today. You now know more than most people do about what is going on in the world of finance today. Thank you for listening to The Capitalist and supporting us. Together we will make capitalism great again.